Hey, this is Mike Mascia at Cadwallader. Thanks for tuning in to Fund Finance Friday Industry Conversations. Excited to have my good friend Michael Timms from 17 Capital here with me this week. Michael, how you doing?
I'm good, Mike. Thanks for having me on.
Yeah, you bet, you bet. Well, you left one of the best fund finance shops on the street to move over to 17 Capital. Congratulations on the move. It must be a pretty good and exciting move for you to have made the jump.
Yeah, I appreciate it. It's definitely been an exciting couple of months since I've come on board and having a great time with it. It's an exciting time to be at 17 Capital.
Yeah, that's awesome. Well, tell us a little bit about the firm.
Sure. 17 Capital was founded in 2008, and the firm really pioneered the use of portfolio finance in the private equity industry. So we provide non-dilutive strategic financing to private equity management companies, to their funds, and to institutional investors. We invest across the private equity capital structure, kind of via one dedicated strategy, portfolio finance, but we have two different products that we go to market with: our preferred equity product and our credit product, which really gives us a nice range of capital solutions to offer to our counterparties. As a firm, we've completed over 60 transactions since inception, deployed over $5 billion, and actually close to $3 billion of that has been deployed in the last 18 months alone. So again, very exciting time for 17 Capital and for me personally to be coming on board.
Yeah, and you guys just raised a new fund, right?
We did, yeah. We raised our fifth preferred equity fund, which closed at the end of June at $2.9 billion. The total capital raise was actually $4.5 billion, including our co-investment vehicles and our SMAs. So very successful fundraise for us. A couple of the statistics we like to point to there: 90% of our investors re-up from Fund 4 to Fund 5, which is great. And actually, over half the capital raise came from new LP relationships. So very successful kind of fundraising cycle for our preferred equity product. And we actually have a dedicated pool of capital for our NAV loans as well that we can touch on later.
Yeah, well, that's a sensational fundraise. Congratulations. Tell us a little bit about your role at the firm.
Yeah, I'm a director on the investment team. So my role is really to kind of be in the market, engaging with private equity firms, with intermediaries, law firms like yourself, investors, really anyone within our ecosystem, kind of just explaining how our capital can be used and ultimately trying to find and then execute interesting transactions for both our preferred equity and our credit funds. Our investment team works across both products.
Yeah, what kind of transactions are in your wheelhouse? Like, when should we be thinking of you to refer you?
Yeah, it's a great question. So I mentioned before that we kind of invest at the fund level, the management company level, and the LP level. So I think I'll answer that kind of in three different categories. But beginning with the fund level, it really comes back to this theme of us investing with successful managers and behind successful portfolios. So we're looking to provide capital to either increase investment capacity, to fund growth initiatives within the portfolio, to fund add-on acquisitions, to clean up capital structures in individual companies. Most oftentimes when a fund has limited availability to uncalled capital. And so, the subscription line is obviously limited as well. We also provide capital to those same types of funds who are looking to accelerate liquidity back to their LPs. So really the theme of kind of holding on to their winning assets longer, but still sending money back to LPs in a manner that's kind of consistent with their kind of objectives for the fund cash flows. So that's at the fund level. At the management company kind of GP level, you can think of our capital as kind of a non-dilutive, self-liquidating alternative to or complement to a traditional minority equity stake sale in a manager. So there we're providing capital for growth initiatives such as funding larger GP commitments to fundraisers, to seeding new investment strategies on the balance sheet before kind of going out to market and fundraising around those strategies, to anything from hiring new teams, building out new offices in new geographies, et cetera. And then we're also accelerating liquidity to founders and partners in those transactions. So big theme recently has been around succession planning. Our capital we think fits really well for providing liquidity to the founders, to the partners, without kind of permanently selling or permanently inviting a third-party equity investor into the ownership structure of the company, which helps align incentives within the team and within really for the investors, we think better than a traditional minority stake sale. And then we also provide, we do these liquidity out transactions for regular way kind of estate planning and tax planning purposes as well, that really don't have anything to do with succession planning. And then I guess lastly, at the LP level, we can be helpful, when LPs, want to retain the upside potential of their portfolio, but they have a liquidity need and they don't want to, go to the traditional secondary market and, sell a piece of their, private equity portfolio.
Michael, you'd mentioned the designated pool of availability for NAV loans. Can you tell me a little bit more about that?
Yeah, we definitely do have that. We've been active in the NAV loan space recently. Our two most recent transactions have been, $500 million and $600 million respectively. So they're definitely skewed, towards the larger end of the transaction volume. But we have, just like on the preferred equity side, we're definitely interested in transactions kind of going down to as small as call it around $50 million as well.
That's great. Are there any particular types of sponsors or asset classes you all focus more in on? Or are you relatively, open to the larger asset classes?
Yeah, so historically we've done most of our work within the private equity kind of landscape. I use that word to mean kind of anything from venture all the way up through kind of large cap buyout. But we've definitely worked with sponsors that have different investment strategies. We've worked, with balance sheet type investors that have, a portion of their capital deployed in, private credit or real estate or anything else really. So we're not exclusive to private equity, but that has been, where we focused a lot of our time historically.
Yeah. And what about transaction sizes?
We're pretty flexible on the transaction sizes. We're really looking at deals kind of, starting out at around the $50 million range, kind of all the way up to, the $500 million range, and even larger in some instances. And that's across both our preferred equity and credit products.
That's great. And are you staying in San Francisco, or are we going to get you back here on the East Coast?
I am staying in San Francisco. So, I was hired definitely as part of our, kind of global expansion efforts, but specifically to me to help open an office here on the West Coast and really grow our footprint in the U.S. We view the U.S. very much as an area we want to continue to invest behind. I've made a number of hires in New York recently as well. So I'll be staying out here and looking forward to your annual or biannual visits, Mike.
You bet. Well, look, this is great, Michael. I'm thrilled for you. I know you're going to do terrific in the new role. We'll certainly be looking for opportunities to refer you.
I appreciate that, Mike, and thanks for having me on. It's good to catch up. Hopefully I'll see you, in the next few months.
Look forward to it. Thanks for tuning in, viewers.
The material and information contained in the podcast is for general informational purposes only. Any use of the audio within this podcast without the express consent of Cadwallader is prohibited. Quotes from this podcast may not be used without the express permission of the speaker.